So I get asked a lot, how do I trade without rarely any indicators? And in today's video, I'm going to show you guys kind of the tools that I like to use whenever I'm trading. But once again, a lot of new traders tend to use many indicators, EMA crossovers, MACD, confirmation, and vice versa. I just keep my trading very simple, use a eight-day moving average with the Bollinger Band, and of course using the vol. So not really that I hear about in the industry is the VIX. VIX is a very useful tool which I currently use, and I use it every day. I've been using the VIX for about 3 years now, and it's a severe tool in my trading. If I don't use it, I can't really get market gauge the upside or downside, or whether we are in a consolidation. So in this case, this is the 24th of February. I specifically picked this date because it shows clearly how clear invalidation levels on the VIX can affect the market. And in confluence with that as well is how other Max 7 names perform intraday and based off the VIX. So prior to 24th here, we had a huge high volume day to the downside. I don't recall what we had here. I think it was something around capex spending on the state. Essentially, the VIX spiked up from 19 handles above to 22 handles. And so if I go here to the daily time frame and we kind of go below that here, which is the date that we were looking at here, is the VIX at the low was at 1867 handles, and then at the high of the state was 22 handles. So the VIX was up 18% in just a matter of 2 days. Okay. Whenever you see that, hypothetically speaking, the VIX, if it goes up, the market should be pushing lower. If the VIX goes down, the market should also rally. Okay. And so we saw this prior to the 24th. We had a high volume day to the downside, and you guys can see that there. Okay. So going into the next day, the way that you would want to use the VIX in confluence with your tools is okay, look, we have a previous day low that was placed. You could take the minimum value on a mathematical standpoint, the minimum value of that day. And then, of course, now you have a level to base off your risk off the next day, right? We had an overnight session of price kind of doing its thing there, consolidating and pulling back. And so typically, whenever I see days like this, where we have the market rally overnight, sort of, and pull back, I like to use the pre market lows as invalidation points, or typically maybe the previous day low, which is more risk. So I would have to adjust my trade to that risk. Whatever your risk may be, you would have to adjust to that. Okay. So in this case, 396 played out very well. But look at the VIX, right? VIX was at 22 handles the day before. That was a critical level. And I'm a big believer that the market doesn't just move in support and resistance levels, the market moves on mechanics. And if you can find where institutions are hedging or setting their levels at, buying aggressively and have algorithms that can provide a serious edge. And for example, here, the VIX failed to break above 22 handles. So going into the next day, you can say, look, you know what? I'm going to be patient off the open. I'm going to look for this to test 202 handles. Maybe it goes up and we trap a bunch of shorts. And then we kind of reject off that 22 handle and we can long the market on that 22 handle reject, right? And that's exactly what we got right here. We rejected off the open. VIX was up about 18%, not normal. And then you guys can see you can put your risk at 396. But let's say you missed part of this move, right? So how do you read volume? How do you know when there's maybe a trend, or how do you know if you should go long? Maybe a novice trader would see this as a short because there was a supply zone. You name it, right? So in this case, I'm using the VIX. VIX is rejecting that 22 handle. As long as the VIX remains within this range, I am bullish, right? You see that momentum. So as long as you see that, that could be okay. Look, you know what? I'm interested. I'm going to put some risk on. So let's say you miss this move. Perfect, right? On the daily, we're still holding above the previous day low, and we have some support to that extent in the overnight session. So therefore, let me try putting on some risk, right? So here, price pulled back from 403 to 401, right? So let's see, you missed that. Now look, you're considering longs, but look at the volume here, right? Here we got equal volume, which is what you call an anomaly. You could tend to short against those or short on those pops. Uh, those are also really nice moves that you can trade on. However, here you want to play the upside, right? VIX is going in your favor, but look at the volume here, how it is slowly uh, declining, right? So whenever you see that, right? I'll get this tape playing here. Whenever you see that, and I see that there's equal volume, or we're getting some sort of lower volume here, you can call this almost like a volume profile, but not on the vertical side, on the horizontal side, right? On the volume axis. So I would be willing to put on some risk depending how the offers get hit and if there's momentum here to buy, right? Right now, you're seeing this, maybe you were short on that, but once again, we're getting that equal volume at the lows, indicating maybe this is false selling. I'll consider putting on a second leg up move here. So now let me kind of accelerate it here too. So let's say, buy Tesla contracts, which at the market they are pretty expensive. But here, let's say like 402 contracts, just buy 10 contracts, right? You're long off of that. Is here, right? You're now long. So then we kind of accelerate. Our thesis is okay, as long as the VIX rejects this, we stay within this zone, and a risk below at this like 400 level. Okay. So therefore, let's say we kind of accelerate here. See if we can speed up the tape. Once again, we are getting low volume, indicating that this is probably more than likely a false selling move to the downside, and in confluence, we're using the VIX in our favor. You guys can see that already starting to bounce. And if I go to trade, I will enable this here. You can see clearly how much you're up in P&L there by percent. Don't mind the previous P&L there. It was doing some back testing results there. And you guys can see that, right? We got low volume here, indicating false selling. I see that. I'm intrigued, right? I'm very intrigued off of that. We got the VIX. So as long as that's being met, we should see the market rally, right? Maybe I'll add to my position there, depending how the way it's moving. So put that Tesla. Maybe I'll add 2 more contracts. There you go. Starting to get that momentum to the upside. Ideally, you would want to see those offers hit the offer there, taking out 403. There you go. You're up 6%. Let's say there you go. It's looking great still. Put this at 839. We'll speed it up on the tape here. And as you can see, that was a perfect second leg off the VIX being rejected and seeing that continuous upside movement. You can see that there. So now we just play this on the tape. We're pre-buffering still. Very, very nice trade there. Just flat your position, close that out. So that's how you read volume on a second leg off the VIX. I hope this helps you guys out. Let me know if you guys got any questions in the comments, and hope you guys have a good day.